Today on the CEO Barbecue, we're looking for silver in Mexico together with Kootenay Silver. And if you want a bullet point summary of this conversation and all the other CEO barbecues in your inbox once a week, go to researchtalks.com and subscribe to our free newsletter. Now, the company you're about to hear from has paid us for the production of this video, which means that this is not research, it's an advertisement, and you should treat it as such. Research is conducted by reading the company's official filings, which you can find on setterplus.ca. And please only watch this if you absolutely know what you're doing. This interview is intended only for experienced junior mining speculators because mineral exploration, development, and mining is a very tough business where failure is the norm and should be the expectation. This is going to be a conversation that is general and impersonal in nature, containing forward-looking statements. I am not a licensed financial advisor, and my business sells content-producing services, which also makes me biased in multiple ways. So before continuing on, please talk to an independent investment advisor with a good long-term track record because your capital might be at risk. If you're not 100% sure you understand 100% of the disclaimers I just showed you, please go to the last section of this video and do not consume this content unless you fully understand and agree with everything said therein. That all said, Kootenay is listed as KTN on the TSX Ventures Exchange, where over the last 3 months, the average volume has been about 170,000 shares. The stock's 52-week high is $1.53, and its 52-week low is 84 cents. With a market cap of just over 80 million Canadian dollars as of today, and again, as of today, 62.5 million shares outstanding. Today, this is a $1.30 stock with a 50 and a 200-day moving average at respectively $1.01 and $1.06. Now, before I move on, it is worth pointing out, that's why I emphasized on it just earlier, that Kootenay has just upsized its recently announced financing to $17.4 million at $1.05 per share. So that's going to add about 16.5 million shares outstanding to that 62.5 number that I just told you about, which means that the new market cap will be closer to $100 million if and when this financing closes, again, pending or depending on whether this is actually going to be the size or whether it's going to get upsized or not, but we'll talk about that later. The financing is also going to include about 8.3 million new warrants. That's what it's going to add to the registry. They're going to be at $1.58, which added to the 4.1 million options, RSUs, and DSUs combined, as well as the 17 million warrants that are already outstanding as of today, will bring the number of fully diluted shares, so everything combined after this financing is closed, to about 125 million, meaning from today, and assuming that this financing closes as it is now, and assuming that all these dilutive securities get exercised, which are a lot of assumptions, I understand, that would result in the issuance of about 100% more shares than what is outstanding at the time of recording, which would then result in about a 50% ownership dilution. And of course, that's a big if, but if all dilutive securities get exercised and the financing closes as it is today. And of course, none of this accounts for potential dilution down the road, which is also not unlikely, given that this is a pre-revenue company that operates in what is a very capital-intensive industry. Before this financing, about a third of the company, or 32%, was held by institutions, 4% by management and directors, 6% by Condor, and 5% by Eric Sprott. How that's going to evolve with this financing and whether insiders are participating in it will hopefully be something I can ask Jim about later on in the conversation. This is also normally where I'd start going through the company's financials as well as tell you about the business of Kootenay. But Jim and I have done multiple interviews in the past, so I'll save you that overview here and we'll get straight to the point. Just very briefly, it is Columba, that's Kootenay's newly crowned flagship asset. It's a 100% owned high-grade epithermal silver vein camp in the Sierra Madre of Chihuahua, where a 53 kilometers of drilling that happened in 217 holes have carved out an inferred underground resource of almost 6 million tons at 284 grams of silver with some lead and zinc credits on top of that. For a 54 million ounces of silver, 25 million pounds of lead, and 65 million pounds of zinc, across 17 veins that occupy a 3x4 kilometer caldera-hosted swarm, which the company believes is still wide open, both laterally and at depth. And they're following it up with almost as much drilling as what has happened on the project to date. So there's going to be another 50,000 meters of drilling that's planned for this project on the back of the financing, of course, and that will, of course, be part of the conversation today. But for this to actually turn into a conversation, I'll have to shut up already and Jim give you the word. But first of all, thank you for being here today.
Yeah, thanks, Antonio. Great to be here.
The pleasure is all mine, and I'm looking forward to the update here because it's been a while since you and I spoke. I met you at a conference in Zurich, but just before that, it was actually about a year from now that we did a proper deep dive, a proper CEO barbecue, if you will. So, what have you done for shareholders over the last 12 months?
It was lots of drilling and lots of drilling that culminated in this maiden resource, which we just put out about a week ago. And that was the whole objective of that program, which was financed last April. 20,000 meters of drilling added to what was done before, for a total of over 50,000, around 53,000 meters in all, and now the maiden resource. And really great resource, great start at 54 million ounces, all in the inferred, really nice grade at 282 grams, especially when you consider the average width of these veins and all the veins put together. And it was mostly three veins that made up the resource here, three primary ones. And the average of those is combined is like 5 to 6 meters, true width, really great width for veins. Bodes well for what your potential cost could be, has the potential of lowering your cutoff grade, all kinds of benefits. Even just as importantly, or more importantly, all of these zones are still open for expansion, either laterally along strike or down dip, deeper, or both. So a lot of low-hanging fruit on the follow-up program that's coming now. Once the financing's closed, we'll get back in. It'll allow us to drill another 50,000 meters, which basically doubles what we've already done. And the immediate focus of that program will go into the existing resource zones that, as I said, are wide open to expansion. So start stepping off systematically, 100-meter spacings or thereabout, and keep expanding until you find the edges. After that, the next level of priority holes goes after the areas that we've drilled that are not in the resource, that didn't have enough holes in them but hit silver, and to start following similar program of systematically stepping out from those to see if we're building resource bodies there. Then the last level are veins in areas that we haven't even drilled yet. So there's even more to get to that hasn't been touched. So really focused, straightforward program here going forward once we get this financing done. Big program, which means we'll have several months of work ahead, drilling, news coming out, pretty steady over the next several months, for at least the next 12 months.
Plenty to discuss there. I hope we'll be able to touch upon everything. And it sounds like you've been busy, going through your news releases over the last 12 months. You can see that, but I wouldn't know if I only looked at your share price, though, which is more or less flat since the last time we spoke. Even though silver is up almost $10, so that's over 30% since then. Both the SAL and the SALJ ETFs are up significantly as well. So how come? If you're doing work, you have this resource, you like it, you think you can expand, silver is running, some of your peers are running, why is your stock not running?
Well, about 3 weeks ago, we were trading in the 80-cent range. Now we're $1.30. So I think
looking at it more of a year-on-year basis type of thing. So
it depends on your time frame. So last October, when silver took a run and we were in the middle of drilling and putting out good results, we were $1.50 stock. And then the breath came out of the sector, the big time in the U.S. election last year at the end of October, and really sagged across the board. And we did that as well at the same time. And so we really flatlined after that, as he pointed out. And now, just recently, with appetite coming back in the silver market, and then buoyed by our maiden resource, which was a big milestone for us. We've been talking about that for quite some time as we were drilling, that the whole intent was to come out with that maiden resource. We did. It's a really good maiden resource, well received by the market. You can see the reaction in the market from it and the appetite to finance it further. So we're really pleased by that and really well set up to move it on to the next stage now.
I do want to talk about that financing. We'll get to it here in a second, but you talk about potential expansion here as well with this 50,000 meters. How much? If your geological dreams come true, how big could this thing get in I suppose in in silver ounces, or maybe even in silver equivalent ounces, because we'll talk about met, but I know you have lead and zinc, so silver or silver equivalent, whatever you prefer.
Yeah, so we reported this maiden resource as all silver. We've got significant lead zinc component there, but it's not yet wouldn't add much in silver equivalency at this stage. These epithermal vein systems tend to zone into higher base metals as you go deeper and deeper. That's a rule of thumb. They don't all do that. We're starting to see signs of that in our drilling, and particular in the D vein. So maybe we're getting into more significant base metal. We'll find out in this subsequent drilling if that's the case. So what we've reported is silver. And so, very interesting because because geologically it's a classic vein system. It's an epithermal vein system. So it's like it's a manifestation of a hot spring at depth, basically. And these things have tops and bottoms to them. And the very, very tops will be a hot spring if it made it all the way to surface. But you don't typically have any precious metals up there. You have to get to some depth. And that's exactly what we're dealing with here. These veins are sitting in an old volcano with a caldera form is, of course, classic caldera. You have this bowl shape in it. And at the bottom of the bowl, the very top of your veins are exposed. Above that bottom, as you go up the sides of that volcano, higher, you lose the vein because it's disappeared. It's pinched out. You're literally above it. But yet when you drill down to this level at the bottom of that old caldera and deeper, you're hitting the vein and you're getting silver. When you follow that vein up the hill, it eventually disappears. We can map it as a structure, but the silver drops down to 1 gram. But when you drill down to that depth and deeper, the vein's still there, and you can get into some very high grades. One of our best holes, hole 164 on the D vein, is a good example of that. At surface, it's very high. It's a big ridge top there, 1,900 meters or more above sea level. You can find this little structure. It's about 1 meter wide, 1 gram silver, and we're mapping it out from drilling. We're projecting that was what we thought was the vein at surface. We drilled down to that critical depth and a bit deeper with this hole and a big aggressive step out, and we hit 98 meters at 211 grams silver. 98 meters at surface, there's nothing. It's about 1 meter wide. True width was about 48 meters in that intercept. So, geologically, this is classic epithermal vein system, preserved almost entirely from erosion. So you're asking about the potential upside here. So when we look at the upside potential of project, we look at scale. What's the volume? You start by the the area on the ground that you're occupying with these structures. So this system is about 4 kilometers by 3 kilometers. That's similar scale to things like Las Chispas Silvercrest that Coeur just bought out. It was about 140 million ounces in resource stage at the time. And they were mining, of course. And then the Panuco discovery, similar footprint to that. And that area that they're working on is over 300 million ounces in silver equivalent now. So we've got the scale, certainly. And now from the drilling, we know we're getting the results. And we know it's entirely preserved from erosion. So none of it's been taken away from erosion. Another great positive. And also critical in that D vein, which is our principal vein so far, we had one aggressive step-out hole in the last drill program. We really wanted to push it to depth. So we were drilling up here kind of in the top 250-meter band where we started to see the silver come in for the most part. And then we took one deep hole, project the structure down, and cut down 300 meters deeper, so doubling the potential depth. We hit the structure really nicely, come into the mineralization that before you hit the main part of the vein where the high grade is, It's grading, and then we hit a cavity. So you get these natural cavities and caverns happening along these veins erratically in different places. So unfortunately, we hit a cavity there, didn't have the high grade preserved. If it was removed, if that's the case, it's kind of what we think is happening. But the point is, man, the structure's still there, still mineralized, double the depth we've tested so far. So that this is in our opinion, a really, really strong vein system. It's got a lot of depth extent to it. It's still going deeper than that to some extent. We don't know yet. We'll eventually get down there and be testing that. And so we're in a vein system we believe is going to be 100 million ounces or maybe some multiples of that. It could be one of those that's a few multiples that size. Now, it's going to take a lot of drilling to prove that, but now we've got, once we close the financing, we're going to be doubling what we've ever drilled before. So we'll be testing a lot of this potential. And we're going to go right after those resource bodies that we have defined in the veins because they're still open, as I said earlier. And that's a very obvious place to go, very high probability of hitting. Keep following it till find those limits and then move on to the other targets we have after that.
How big do you think this is going to have to get, or how big would a silver asset in Mexico have to be today in order for it to be taken out?
Well, it's all in the economics. So rule of thumb is people really like to see you get to 100 million ounces, but that's a rule of thumb. That's not necessarily a number you'd need. It's more about what's going to turn into reserve. And that's when you start looking at your economic studies. So our next step is to build this resource we have, do a resource update, get it to a size where it justifies a preliminary economic assessment. So like use Las Chispas mine, for example, operating mine, they have 140 million ounces in resource, the last report I saw filed. And the reserve was around 75 million. So that's what they had out of those ounces, that's what they had in the book. So and then scale too. So the bigger the scale, if you're mining, the more you're mining, the bigger deposit you want. You need to get enough ounces to pay for capital costs. So that's what dictates the size, along with the profitability of the ounces you have in the ground. And that profitability is impacted by things like the width you're mining. The wider the width, the lower the cost, and the grade, of course. So the higher the grade, the more ounces you're taking out in the same volume of rock. So those things all impacted. A general rule of thumb, people really like to see 100 million ounces. You get to that, and then they start thinking, wow, okay, we're onto something here. The other thing that mining companies will look at is what the future potential growth is for resource on the project. So if you're showing this tremendous depth like we are, and you're showing all this strike length of veins around and not being eroded, a lot of what you have is actually hidden. It's not really exposed. So you've also got that potential of hitting these blind veins. And that you get pleasant surprises in that sort of environment. So that's also a consideration that companies use when they're looking at, well, we want to buy that project. Not only does it have an economic deposit, we can build a mine and make a certain X return on it, but we know geologically we're going to be finding a lot more, and that's going to pay us much more than the initial investment return. And so that's how things are typically evaluated.
What about the timing and meterage of this whole process? Like, how long could it take? I mean, you compare it to Las Chispas. I think they did it relatively quickly, 6 years, if I'm not mistaken, to go into feasibility. How long is it going to take you, and how many more meters would you have to drill in order to get to that critical mass where a transaction might be reasonable to expect?
With positive results, we can get to a PEA with this raise that we're doing now. You could potentially be there in about 18 months. And because there's a lot of drilling to do. And then we're starting also a very large metallurgical program that will be PEA level, take several months here going ahead. That's getting kick-started now. And we have over 1,700 kilograms of sample selected and into the lab. And so that kind of timeline is realistic. Drilling to get to feasibility, you'd have to probably double at least what we would have done at the end of this program. So at the end of this program, once the financing is completed, another 50,000 meters, we'll have 100,000 meters done. And then to get that towards a pre-fees or fees, you need to start closing in your drilling, moving things into the indicated category at a minimum. Lots of infill going on, probably more metallurgical work, some other work involved as well. And you'll probably double the size of your drill, what you've drilled to date. When you get to that stage.
What would that cost you? 100,000 more meters than what you're going to have drilled at the end of this program, essentially.
That would be 30.
Yeah, what are you paying per meter? $300?
So 50,000 meters is about 15 million. So $30 million.
Yeah. Okay. Yeah. So multiple more finance. That's good. That's what I was thinking about. I want to talk about financing. That's why I'm asking you these questions here, Jim. But you set out to raise 12. It's almost up to 18 million bucks right now. Why take the extra dilution if you thought you could do it for less?
Because it gives you the money to do that full 50,000 meters that we had designed. And we don't have to worry about the market. It's tricky. It's a tricky decision process. Because on the one hand, you're thinking, well, look, we're breaking out into another up leg on the silver market. Looks like we're really getting underway in a bull run. The price is going higher. We probably can raise money at a better price. But that doesn't always work out. We're very confident on the direction the silver price is going, but the timing, quite frankly, we have no idea when these things are going to break out, what things are going to look like in 6 months or 12 months or 3 months. Things change fast. So the last thing you want to do is embark on underfinance your program, get near to the end of the program where you actually need to raise more money and go into one of these periods where something's happened in the market and silver prices really pull back. There's no appetite for risk capital, and then you're sitting there stuck. And your share price languages because of it. You lose a lot of time because of it. And worst case scenario, you're forced to finance in a really bad time of the market at a low price and suffer a lot of dilution. You want to try to get ahead of that curve. And we're in a position now to get ahead of that curve. And that's what we want to do. In the last 4 years or so when we were financing, we never could get ahead of that curve because we were, first of all, we needed to finance to drill the project. We had it under option. Then we had some really big option payments coming up. And so we had a hammer over our head. We didn't have the choice of being able to wait for better market. But we got it financed. Now we own 100%. So we actually do have some latitude in choosing when we can finance. But you really want to get a strong treasury under your belt. So the market knows we have the money to do the job now. And I think you see that in the reaction of the financing. We financed and briefly traded down to the finance level, but not for very long, for about a day or two, and then bounced right back up to this $1.25, $1.30 level. So pretty strong indication of what the market thinks about that. Now we have the money to do the job, go do the job. And people who want to buy the stock are in the market now.
Are insiders going to be participating in this financing?
Yes, I'm participating at almost every financing, except for maybe 1 or 2 in the last 5 years I've been in.
So are you going to be able to keep that 4% insider ownership, or is that going to get diluted down?
I'll be diluted down a little bit on that.
Okay. Well, is there an internal plan to better align insiders with shareholders as you go through this process? And again, I know it's a little bit of it is a process, and you got to go searching for it because you need that money. You have a very clear plan as to how much drilling you need, where you want to get. But how do you keep insiders aligned with shareholders in the process without, getting diluted to almost nothing?
Yeah, well, we formed the company. Ken Berry and I formed this company 20 years ago. So pretty aligned that way at the top end of the management. And by average price, because we've had to do a consolidation, my average price now with the most recent purchases is approximately $2 and just between $2 and $2.50. So other mechanisms you do to align, you issue RSU, DSU ownership directly aligns to the performance of the stock, as do options. And depending on who you talk to about what works better, you have differing opinions. But we have a mix of option RSU, DSU, share units that gave direct ownership. And we do this right down to our team on the ground in Mexico. They participate in that too. And that really gives them a sense of ownership. It really hits home. So that's a very good mechanism to use.
How long into the future will this money get you now that you're going to close here on almost 18 million bucks?
We'll be working steady here for the next 12 to 18 months on this money drilling. Right. Basically drill Columba.
But I mean, that includes overhead. I mean, that's going to, in terms of runway, that's also 12 to 18 months.
Yes. Yeah.
Okay. Well, let's talk specifically about what work you hope to complete with this money. Again, you're saying you're going for 50,000 meters, or should I say another 50,000 meters, because just over 50 has already been drilled here. What's the goal for this drill program? What are you really after?
Yeah, well, the goal is expand the resource. Let's get it up to 100 million or close to 100 million as we can with this drilling. Yeah. And then assess that at the time we do that, then decide if now is time to do a PA. If with good results at the end of this, we could be delivering a PA as well.
So what would you consider success? I mean, how close to the 100 million would you have to get here in order for you to be like, yep, this was money well spent?
Well, that's a good question. I mean, you might be able to do it with 80 million ounces, deliver a very positive PA. We have to look at what the results are, average grade, the widths, the metallurgy, all those things go into that assessment. So, and we'll be doing that, measuring that internally as we go along. Well, how's this looking? How close do we think we are? And well, if we add another 5 million ounces, then it's going to look pretty good. So let's do that first. So that's sort of thought process that goes in behind the scenes as we're moving along.
What are you thinking in terms of step out versus infill? What's that split going to be like?
Well, right now, the initial, let's call it 30,000 meters, is effectively going to be all step out. That's pretty definite. We want to focus on moving 50 to 75, 80, and beyond. We really would like to get as close as we can to that 100 million before we start doing infill. You might do some infill to better define your mineralized chutes. So internally, you've got geometry inside veins or the plane. You'll get these thickened zones that open up like this, and that'll have some geometry. So you might want enough density in that drilling just to know you follow it this way, or that way, or this way. What way is that going? Because those fattened zones are where you build your most ounces most quickly. So understanding that orientation is pretty important. So that's probably the only reason we'd want more density at this stage.
What veins are you going to be focusing on? Again, you've got 17 of them. Hopefully you don't start running out of alphabet soon, but you have A, B, and D, and G and everything. So what veins are you going to be focusing on?
Yeah. Well, maybe it's good we run out of alphabet, but the focus is going to be on the D vein, on that historically worked F vein, and all of what we call the B corridor, which is B2, and another one we call loop A. So I guess with that we've run out of alphabet, loop A. But those are the ones that make up the bulk of the resource, and they're open-ended. So we'll just continue stepping out till we define the edges, till we find that, and then move on to the next ones.
Well, you talked about depth earlier on a little bit as well. How deep do you have to drill this year?
Well, it'll be variable. The B vein corridor will be basically the same depth we've been testing. There's a lot of strike on that. The historic F vein will be going deeper, so deeper than 250 meters vertical. The D vein, which has the bulk of the ounces, about 31 million of the ounces, is there's sort of the western half of that vein. We've got good density down in the top 250 meters of the system. So the next round will be 100-meter step outs, pushing that deeper for another approximately 150, 200 meters. But the other half is variable spacing. A lot of it's 200-meter spaces between holes. We need to add enough to get down to 100 meters to pull stuff into inferred in the upper 250 meters, and then start pushing down deeper than that on the D vein. So it all depends on what structure you're on. Also, where you are on the hill, because we've got topography. Obviously, when you're higher, the length of the hole is deeper. Really, what we're looking at, it's an elevation control. So when you get down to 1,800 meters above sea level, you start to see your grade. So that's the target and deeper. And our deepest hole is just above 1,200 meters above sea level with good wide structure and mineralized. So all kinds of room there.
How challenging is the topography really challenging, especially when you look at it from the perspective of topography in combination with vegetation? Is the drill spots where you want to go and drill, is it accessible?
It's not too bad. It's variable. Some of the areas you're high up in the ridge, so you're doing long holes. But the nature of the topography aside, I mean, you don't have a lot of precipitous cliffs and rock to deal with. So it's not too bad in terms of logistics. And all of our drilling has been done with portable rigs. So we literally build trails. The drill crew, they have a special crew just dedicated to building trails and pads. Mm-hmm. And they do this all by hand. And so really small, minimal impact. You can't even really see where our drill pads were anymore after a year or two. And literally like walking trails. And so we can gain access. I'm not going to call that work easy, but we can gain a lot of access like that, and without the need of bringing bulldozers, building these roads everywhere. So really big advantage there. We really like this way of doing the drilling. It's such low impact at this early stage. It's a great way to go.
How many rigs are you going to have turning this year?
We'll have initially here, we'll have a couple rigs, probably 3 rigs going. And that'll like 50,000 meters. It's going to be 12 to 18 months of drilling here.
Right. Yeah. When do you start?
We'll be mobile. We'll close this financing first. We're at the end of June here. So we'll be looking at late July start.
Late July start, and then 12 months. So it's going to be a year and a half. So by the end of 2026, you will have completed all that drilling. Essentially, that's your cutoff. Yeah. What about assays? How is that are you gonna batch it? How are you gonna be announcing assays?
Yeah, we've always done that. So the several holes come in, that gives you context, a better meeting, and then we do releases. So it could be anywhere from 4 holes to 8 holes, and sometimes 10 holes come at a time. Partly depends on if you're getting all your assays back rapidly. That assay turnaround varies with time, just depending on the workload of the labs. But currently, it's pretty quick right now in Mexico at the moment.
So if I say assays in September, would that sound realistic?
Yeah, I'd say mid-September. I'd look at mid-September.
Right. You're also going to be doing med work concurrently with that, I suppose. What are you doing for med work?
It's going to be a very rigorous program, a PEA level program. So there's almost 2 tons. It's over 1,700 kilograms of sample in there, and it'll be broken out as to domains. There's hang wall, medium grade. There's There's the core, the main vein, there's the high grade domain, and then there's quite a low grade envelope around things that we're not really looking at right now. It's well below cutoff, but we'll be doing the standard leach test, different grind sizes. We'll be looking at different reagents. We'll be looking at flotation, recovery by flotation, by different leach methods, and by cons. By when I say flotation, I mean really talking about lead zinc cons, how that looks, and assessing what's the best combination or the best process or best combination of processes for your best recovery. We'll also be looking at sorting technology. The sorting technology is really advanced in the last decade, where you get these I don't know what to call them, but the sorting circuits within your process, and they're very high speed, very high tech, and they're reading through light. So you train the machine by color what to reject and what to keep. And with air pulses, it shoots off those rocks going past on a conveyor that are waste or ore. And so you concentrate, you can take your raw ore and concentrate it to a really good grade if that works. And so that can really make a difference. Also, it can potentially lower the cutoff quite a bit, and and still maintain a good cost structure underneath it if it works out. So it's one of the things we're going to be. It's being used, applied more and more. Like I said, 10 years ago, it wasn't that great, but it's really improved now. So that's something else we're tackling at the same time. Everything we're doing is going to be to a PEA level, so that at the end of this, if things work out well and we build enough ounces with this drilling, we could deliver a PEA potentially.
You're reminding me to ask you about the cutoff, and I will here in a couple of minutes. But talk to me a little bit more about your expectations for the recoveries here, because you're running your resource model with the assumption of 90% recoveries for the silver. So if we look at comparable deposits, either in Mexico or wherever else in the world, is that 90% really achievable in your case? Again, understanding that this would be forward-looking.
Yeah, so this is in consultation with metallurgists, and the mineralogy that's been done so far indicates that this should be an attainable recovery. 90% is quite a good recovery in a silver deposit. You could see silver mines in Mexico that vary from low 70s to low 90s, mid 90s at the best. Mm-hmm. And so it all depends on your mineralogy. Also, all depends how the silver is occurring. If it's encapsulated by something, maybe you can't get some of it out, or how it's bound to other minerals. The several minerals that we see there are ones that leach very well, so that bodes well for us. There's been historic mining here that in the historic mining going back 100 years ago, they were getting in sort of low 70s to low 80s at that time. And then some old metallurgical testing and limited testing that's been done to date indicating that you can get into sort of mid 80s. And so then the mineralogy is showing us that you should be able to get quite a bit more than that again. So the whole program is being designed to get to that stage. Now, we have got to do the work to show that it can be done, how it can be done. You can extract 100% of it, but at what cost?
You would also, I suppose, have to deal with the nasties. I think in lead and zinc concentrates, you could have penalty elements. What's your expectations for that?
Yeah, we have to do the testing for that. What we see out of the assay work we've done so far, I don't see any concerns leaping out. Like some deposits, you can not so much silver deposits, more gold deposits or sometimes copper deposits. You see big arsenic component right off the get-go. And that becomes a concern. How are you going to deal with that? Can you isolate it? Can you neutralize it as an oxide mineral? We don't see those right now. Yeah, we'll get the testing done and for definitive answer. But in the geochemistry, we're not seeing real elevated, nasty elements showing up. And so so far, so good.
I'm kind of running through these questions here, Jim, because I know you don't have too much time, and I do have a couple of more of them. But are you doing any aquifer testing? Where's the water going to be coming from? What is it too early for that?
Yeah, good question. That's one of the next things we're doing. So that old mine is flooded. We're drawing water from that old mine, and we're measuring the drawdown, and we're getting information from that. Also interesting, we mentioned that we hit these cavities, especially in that deeper hole. We hit that cavity, right, the crucial part. And now we've done more recent mapping elsewhere in the project where we see this veining, especially the carbonate veining, having natural cavities in it. So these are things we're going to be really targeting because that's potential aquifer rock as well. These structures that host the veins. And so that's something we're also embarking on. We'll be starting the hydrology work, and we're working on the specifics of that as well, because that's of course very important.
I do want to talk about that cutoff grade before I forget about it. Talk to me about that. I mean, the amount of silver you can pull out of the ground gets almost, if I look at the sensitivity table that you have with the resource, it gets almost cut in half if your cutoff grade goes from 150 to 300 grams per ton. So how do you make sure the cutoff grade doesn't go there? And is it realistic for this to be mined at 150?
Yeah, it is. That's why we used it. So that's a working cutoff grade in Mexico. And so I don't think you can find a mine in Mexico that's got a 300 gram cutoff grade, for example. So like rule of thumb, 150 grams, 180 grams used for narrow veins. You got something that's 1.5 meters, 2 meters. We're averaging 5-6 meters. You got potential for even making that lower, but that's a very good solid cutoff to use for underground mining in Mexico. So which is why we used it.
So in terms of, because your average is what, above 280, if I'm not mistaken?
Yeah, that's right. 284 on the average grade.
Yeah.
And when you look at the cutoff, so if you go from 150 to I think it was 200 or 250, the grade becomes almost 400 grams per ton and almost 35 million ounces. So substantial, real strong high grade inside of the 282. So it looks really good. And the continuity, another important thing, the continuity of the veins and continuity of grade along them looks really good.
Right.
And so that's also very helpful. If you have a lot of variability, then it's a lot harder to build mine plans, and you need a lot more drilling to get to get the confidence that you're required. These veins are looking very good in terms of continuity.
Well, that's a good point. I'm glad you brought it up yourself, because I was going to ask you about it. Average 150 or average 280, but what are the outliers in that? And like, are you dealing with a lot of grade variability and stuff like that? So I'm glad you're already touching upon it. And I think this new drilling is also going to reveal a lot of information about that part as well. I want to go back to talking a little bit about timing, because the front page of the presentation that I've got here, it reads, discovering silver today for production tomorrow. And I'm wondering, what does tomorrow mean in your case? Like, what's the path you envision to go from where we are now to first pour at Columba, whether that's you or somebody else? How long does that take?
You could be like 3-4 years off or something like that. And if the money's there to push it ahead, the faster you can go, of course. Like the Las Chispas mine was from discovery and into production within about 6 years, 5-6 years, I think. And which is pretty quick nowadays. But also they had a lot of underground infrastructure to build off of. We don't really have that. There's three shafts, old shafts there. There's six different levels. It would have to be dewatered, rehabilitated. So there is something there, but we'd have to do a little more work in that regard. It's not, it's not a big deal. It's extra cost and it's a little bit of extra time.
Hmm.
But I mean that sort of time frame is reasonable, I think.
I suppose it is reasonable in terms of completing the work, financing the work, and everything. But what about the permitting process? That's really why I asked about it. We see Mexico in the news every day, and there's different. There's news on the one hand side that say, "Oh, no problem for mining." News on the other hand that say, "Oh, it's going to be a big problem." So, how do you envision the permitting process to go with that timeline that you gave me?
Yeah, so being underground, big advantage there because a lot of the question is surrounding how open pit permits are going to unfold. So, and Mexico, the message that we're hearing is that okay, we want to get things right as far as permitting and environmental standards of our existing projects on the books, make sure everything's being done properly, responsibly, sustainably, and then we'll move ahead. So it's sort of like, okay, we're gonna get organized here, and then we're gonna start pushing things ahead. That's sort of the message we're seeing. Underground mining is not really a question; it's the open pit, and that is more of a question. And at this stage that we're at, we're most immediate concern is to get the drill permits, which we have.
Yeah, that's exactly what I was going to ask. And what I remember too is that you do have that, what is it, a 24-month permit that you have?
We have we're permitted. Can't remember what the time date on it, but we're permitted for this full 50,000 meters is permitted.
Okay.
And if we were to start building roads and doing a lot of work like that, we'd need to advance to a different type of permit, which would probably take a few months to get. But for this 50,000 meters, we're permitted. Another important thing is that the core of the project, we have a 24-year access agreement for exploration and exploitation in place.
Yeah. It's another important thing is also the community. What does that look like? How close the closest community and what's the current relationship?
The nearest town would be Nuevas Casas Grandes, about 30 kilometers to the north of us. Okay. And we're on ejido land and also privately owned land where we have the 24-year agreement. We've got great relationships. We've been there for about 5 years now. Really good relationships with everybody locally. That's why we have the agreements.
What are they asking you when you go there and consult with them? I mean, when's the last time that you spoke with someone from the community? And what are the questions they typically ask you?
We're speaking with them all the time. And we've got one of our key guys in Mexico is talking to them all the time. And so, typical interest in what's going to happen, what compensation are we going to give, any concerns with environment are addressed. There's always some questions about that, and questions about if there'll be work for them, what sort of benefits. We will participate in road improvements or land improvements of all kinds of different things. We're basically we're in basin and range country where the the plains are agricultural, and we're up in these low level mountains. There's nobody living up where we are, up in this old volcano. Yeah, it's remote onto itself that way, even though it's only 20-minute drive off the paved highway.
When's the last time you were on site?
I was on site about 2 months ago.
How was it? I mean, how was the security situation? Did you have to get any additional security to get to site, or what's the situation
No,
there now?
no. We've been in Mexico over 20 years, and we if, we we don't work in an area if you need extra security. We won't do it. So this area is quite calm. It's part of the state we're in, very calm, very secure, nice agricultural country, area. Lots of farms, big farms around. Um, no issues with regards to security.
Hmm. What about the other projects that you have, La Negra and Prometorio, La Cigarra? What's happening there?
Yeah, so we updated in the last 12 to 18 months, we updated all the resource reports and all those deposits and to get current pricing and current costing that goes into the resource estimates. And we've just positioned them to be able to move ahead once we get further into a good silver bull market here, which we believe we're just started the next leg on. And we can do a deal that's reflects the value of these projects, whether we sell them or bring in maybe somebody else to advance it towards mining or whatever the case is. But we've prepared those things to move at the right time.
Do you have an internal timeline as to when you would like to have them off the books, or is it kind of a see as you go type of thing?
It's a see as you go because it'll be dictated by market primarily. So at some point, they'll warrant to be moved ahead as well. So we'll also just do some in-house work to say, on paper financial models at this kind of silver price, this deserves a PA, so let's get something out at a minimum. But that we just set things up for that, and we're laser focused on advancing Columba and getting it drilled and getting a resource update, moving it towards a PA.
What would you give your preference to? Like, what do you want to do? Do you want to have an option there where you get paid kind of a, step by step, or would you like to sell them all at once, JV them? What are you giving the preference to?
No preference at the moment. We're mostly thinking about Columba, and so everything will get balanced against that. So if you could sell an asset that took Columba through, feasibility into maybe pre-construction or something like that, well, you'd have to consider it like an outright sale for cash or something.
Yeah.
It might make sense, but that's it's all conjecture at this point. But you have to just keep an open mind. What's going to be the biggest benefit for the company?
What about Columba? Would you JV that at the current stage before you've done the 50,000 meters, or is that completely off the table?
No, I wouldn't consider that. No, not at this stage. I mean, we're financed to go do this work and get this thing bigger. Let's do the job.
Right. Again, a booming silver market, as you said. How do you capitalize the best in the best way off it? Like, how do you go and market this story? Where do you go? How much money do you spend on marketing?
Well, we go and do interviews like this, Antonio. We do as many as we can and get as broad a exposure as possible. And with the internet, how it's evolved, you can get to a much wider audience by doing things like this. And it's we've always done some work with regard to that as budgets allow or as markets dictate. But you always want to be getting that, even when the market's not so good, at getting the name out and getting broader and broader. And now with this new resource out and financing in place, we've caught a lot more attention, getting a lot more interest across the board, and continue doing that. So the budget we've been spending over the last couple of years is usually around 250 to 350,000, and we'll be doing increasing that budget now in this market and with all the work we've got coming up.
Increasing, what would that look like? Would you double it, triple it, less? What are you thinking?
Well, I think we would do it very variably, but I could see it being doubled. Yeah, certainly.
Okay.
and then select programs. And we try different things all the time. And there's more expensive programs out there that we'll look at now that we wouldn't it could make sense before. It's better to be putting all the dollars in the ground. And now there's if you can add 10, 15, 20% to your market cap with a few dollars, well, that makes sense.
I know you're also hitting up the most important conferences. I think I saw you in Beaver Creek. I saw you in Switzerland.
Yeah.
I've seen you multiple places kind of around the world. Where are you finding that the story resonates with people the most? Like, is it specifically the European investors are more inclined to put money into Mexico right now, or where are you getting the best reception?
I think it's become fairly broadened now. Getting good reception out of Europe, out of Switzerland, certainly. You're starting to see broader reception across Europe, different countries coming in now, and the U.S. has picked up too, and we're starting to see retail getting more and more interested. So it's broadened, and you can see it in the financings in the sector with some of, especially the mining companies. Some pretty big bought deals have been floated.
Yep.
And then on the very advanced explorer developers as well, $100 million bought deals with really oversubscribed, and some big institutional money from the generalist funds coming into those things. So that's a definite shift, a real definite shift.
What keeps you up at night, Jim? When you're here to present a bullish story, and I understand that, but nothing's really ever perfect. So what still keeps you up at night when it comes down to Kootenay?
Well, you're always thinking of all aspects, technical aspects, political aspects, finance aspects. The biggest thing for a junior company is access to capital, and because that's the hardest to get, especially the last 5 years. I mean, it wasn't a lot of interest. Now we're into a different kind of market here. We think it's got a lot of running room ahead of it. We think we're into a multi-year bull market here for silver, actually. But as a junior company, when you're not pulling in any revenues, that's got to be the thing that keeps you up at night the most.
Yeah. This has been a good conversation. What am I forgetting to ask you here, though, at the end here, Jim? What should we be talking about that I failed to bring up?
I think you've been very thorough, Tony. You're always very, very thorough. Yeah, which is great. We like to have that kind of a thorough interview and all the right questions asked, because and then people, they get all the information they need.
Well, I'm glad you think that way, and I really appreciate you sitting down with me. Hopefully speak again soon. But again, thanks so much for today.
Yeah, thank you. Appreciate it.
And as always, thanks to everyone for watching Resource Talks. I have a couple of more things to say, though. The fact that this company was interviewed here today does not mean that they're necessarily a good or a bad company. I'm not here to endorse nor attack anyone. I am simply here to ask some questions. If you find that I have failed in asking a question that you would have liked to hear an answer to, which will happen as I'm not an experienced interviewer, please let me know, and I will try to correct that mistake in a future interview. As mentioned at the beginning, please understand that mineral exploration and development is an extremely risky business. Losing money is the norm and should be the expectation. This is a very complex sector, and the performance of individual companies typically depends on many different moving particles, including company-specific factors like geology, financing ability, and many others, really, as well as particles that are outside of the company's control, like geopolitics, macroeconomics, commodity prices, and many more, most of which are nearly impossible to fully understand. Moreover, these companies that typically get interviewed on Resource Talks are in the pre-revenue stage, which means they rely on the public markets for the financing of their operations, which could result in shareholder dilution. Furthermore, as a general rule of thumb, you'll be better off understanding that all company communications online, albeit this interview or their website and their presentation and their social media accounts, or even the social media accounts which you thought were your friends and then told you about a stock, everything really that these companies do is intended as marketing. And although I do not make buy or sell recommendations because there is a clear conflict of interest given the nature of my business, many out there do. And you should be aware of that inherent bias, and you should be careful out there. That bias is not always going to be clearly disclosed with everyone out there. So it is safer for you anytime you're watching any type of company specific content to approach it with a dose of skepticism and assume that the party telling you about it is biased in at least some shape or form, because there will always be a bias, again, albeit clear or not. So always ask yourself what the incentive of your counterparty is and never rely on them regardless of their incentives, but instead double check if what they're saying is true, again, by using setterplus.ca. The fact that I have no idea what I'm doing should already be clear to you at this point. I am not saying this to make jokes or laugh with myself. I just simply do not have a long enough track record of consistent investment profits. So I should under no circumstances be considered an authority on anything. Again, although this may sound amusing to you, believe me, it is not amusing, and it is not intended as a joke. I'm simply pointing out a fact and warning you not to rely on anything I do or say. Unfortunately, at least to my understanding, nobody out there has any special abilities. The CEOs do not possess any superior knowledge, and they cannot know about what will go up, what will go down, or what will go in circles. Some people even believe that to be rule number one on Wall Street. Nobody really knows. None of us know whether any of the company's activities will result in a success, again, given that we're talking about high-risk activities where most of the times it ends in failure. So unfortunately, try as I may, I won't always catch all red flags or all challenges with the companies. So even if I did ask a few tough questions in here, don't rely on this being all of the tough questions. Again, these are complicated startups with many moving parts, and I am conflicted given the nature of this business. Therefore, I cannot guarantee the quality of anything presented in this video, and you cannot hold me responsible for any losses or damages stemming from the way you decide to use this interview. Viewers, listeners, and readers acknowledge and agree that the information presented herein did not constitute a solicitation or an offer to buy or sell any security or investment or to participate in any trading strategy. Resource Talks and all parties involved in the management of the business strictly disclaim any and all liability for losses and or damages, whether direct, indirect, special, or consequential, or other consequences, however so caused, arising out of any use or reproduction of the content published by Resource Talks or any decision made or action taken in reliance upon it. By consuming this content, all consumers vow to release Resource Talks and all parties involved in the management of the business from all claims, proceedings, or consequences. This is all to say, I know it's a lot of lawyer talk, but this is all to say that you shouldn't blindly trust me or anybody on the internet, and you should do your own research. Once again, social media is meant for entertainment. It is setterplus.ca where you do your research. That's where you'll find the company's official filings, and I encourage you to read and analyze the Management Information Circular, the financial statements, the Management Discussion and Analysis, and whenever available, the NI 43-101 technical documents. If you don't understand everything in those documents, the chances of you losing money are even higher than they normally are in this space. And as mentioned earlier, the chances of even the best analysts in this sector losing money are extremely high, since this is venture capital and it is not for everybody. I'll leave you with one of Charlie Munger's quotes, which I wish I had listened to more often earlier on, which says, quote, "If you don't understand it, don't do it."